Hey everybody, good morning, good afternoon, good evening, whatever time zone you're in. Welcome from whatever place in the world you are. If you're new, welcome to the channel. If you're coming back, thank you. So this is going to be one of our money videos, and we want to talk about them dreaded taxes that will be coming up in about 6 months. Well, I don't know when I'm going to put this out. This may be put out in August, so it might be 5 months, but it's coming up, so I just want to do a money video on this and talk about it. And I'm going to go off the screen. I just popped in to say hi. Okay, so we're going to talk about the taxes and what you can do to get ready. I know we don't want to hear about it, especially in the middle of the year. But believe it or not, it's going to be over soon, and you want to be armed and ready to go up, right? The tax breaks, most of them are in the American Rescue Plan Act, which expired at the end of 2021. We had a lot of tax breaks in the last couple of years because of COVID, but the 2022 is going to be a little bit different. There's going to be some new rules and annual inflation adjustments. And 2022 tax year drops back down to $2,000 per child, and the children who are 17 years old don't qualify for the credit this year because of the former age limit, which was 16 years. So these are just some things to keep in mind. Long-term capital gains tax rates on long-term, that is gains from the sale of a capital asset held for at least 1 year, and qualified dividends did not change for 2022. That's good news. However, the income thresholds to qualify for these rates were adjusted for inflation. So in 2022, the 0% rate applies to individual taxpayers with taxable income up to basically $42,000 on single returns and $83,350 for joint returns. So the 20% rate for 2022 at $459,751 for singles and $517,201 for couples filing jointly. The 3.8 surtax on net investment income stays the same for 2022. It kicks in for single people with modified adjustment gross income of more than $200,000 and joint fillers for modified AGI above $250,000. The standard deduction amounts were increased for 2022 to account for inflation. Married couples can get $25,900 plus $1,400 for each spouse age 65 or older. Singles can claim $12,950 standard deduction or $14,700 if they're at least 65. So PayPal and Venmo reporting, starting with 2022 tax year, third-party payment settlement networks such as PayPal and Venmo will send you a Form 1099-K if you are paid more than $600 during the year for goods or services, regardless of the number of transactions. Previously, you were sent a form if you received more than $20,000 in gross payments and had more than 200 transactions. However, 1099-K reporting is for money received for goods and services that are not from payments from family or friends. So that's a new thing. Just keep that in mind. The charitable deductions, the above line deduction, up to $300 charitable cash contributions, $600 for married couples filing a joint return expired at the end of 2021. So you're going to have to itemize your deductions to write off gifts to charity. So retirement savings, many key dollar limits on retirement plans are a little bit higher in 2022. We're coming out of the COVID stuff, so this is why a lot of this is happening. For example, the maximum contribution limits for 401k, 403b, and 457 plans jumped from $19,500 to $20,500 for 2022. While people born before 1973 can put in $6,500 more as a catch-up contribution, the 2022 cap on contributions to simple IRAs is $14,000 plus an extra $3,000 if you're 50 and up. So the 2022 contribution limit for traditional IRAs and Roth IRAs is steady at $6,000 plus a $1,000 catch-up contribution for individuals age 50 and up. The income ceiling on both Roth IRA contributions went up. Contributions phase out at AGI of 2004 to 2014 for couples and $129,000 to $144,000 for singles. So the deduction phase outs for traditional IRAs are also higher levels in 2022. So if you're listening to this video, the AGI of 68,000 to 78,000 for single filers and 109,000 to 129,000 for couples. And most of these resources I've gotten out of Money Magazine, Kiplinger's, or different tax professionals. This isn't it's stuff that I just made up off the top of my head. These are just things that I'm just passing along to help you get ready if you didn't know any of this stuff. So if you only have one spouse that's covered by a workplace retirement plan, the phase-out zone for deducting a contribution for the uncovered spouse starts at an AGI of 204,000 and ends at 214. Now, most lower income people may be able to claim the Savers credit in 2022. This tax break can be worth up to $1,000, $2,000 for joint filers, but you must contribute to a retirement account, and your AGI must be below a certain threshold. So $34,000 for single filers. Married people can file separate returns. $68,000 for married couples filing, and $1,000 for the head of household filers. Now, going back to estate and gift taxes for 2022, the lifetime estate and gift tax exemption jumped from $11.7 million to $12.06 million, which is $24 million for couples. If the portability is elected by timely filing, the IRS 706 is after the death of the first to die spouse. So you can check with your tax accountant on all these types of things. Finally, you can give up $16,000 or $32,000 if your spouse agrees for each child or grandchild or other person in 2022 without having to file a gift tax return or tap your lifetime exemption. Now, if you need to adjust with your withholdings from your paycheck, you can visit irs.gov, get with the tax accountant. I have a few suggestions on my website, and I'll probably get more as we go along. Some of them may be even advertising on this channel. I don't know. I'm not getting paid for any of them as of yet, but that's just so you know. Also, another heads up is the Social Security is looking less than dismal. So I know the tax thing, everything's going up. Unfortunately, it looks like not a whole lot. It's just going up a little bit to cover inflation, is what it looks like. So the Social Security outlook is a little less dismal. The financial health of the Social Security and Medicare was a bit stronger in the last post-pandemic economic recovery, according to the latest reports from the Social Security and Medicare trustees released in June of 2022. So the dire outlook for Social Security hasn't changed. The Security Old Age and Survivors Insurance Trust Fund, which pays retiree benefits, will be depleted next decade unless Congress acts to shore it up, which is widely expected to do. But a few bright spots amid all this gloom from these reports is the trust fund is now expected to run dry in 2034, which is 1 year later than previously projected. So at that time, incoming tax revenue will be enough to cover the scheduled benefits, but the disability fund, for the first time since 1983, is no longer expected to be depleted within the 75-year projection. So a companion report said the forecast for Medicare's Hospital Insurance Trust Fund also improved. So at that time, Medicare would be able to cover only 90% of the benefits. But one bright spot for you retirees is the report predicted a 3.8 cost of living adjustment in 2023, and that's based on a mid-February inflation projection. So Social Security's chief actuary, Stephen Goss, G-O-S-S, is saying that the COLA, cost of living increase or adjustment, would be closer to 8% because of inflation in July, August, and September. Medicare trustees are projecting no Medicare premium increase for 2023 and maybe even a decrease. So we're going to end on a good note. That is a good note for Social Security, if you're keeping up with that. So this is a taxes and Social Security update in 2022 for 2023. So just a little heads up for 2023. I thank you for watching. I didn't want to make this video too long. And hopefully you stayed with me. I was trying to talk kind of fast so I wouldn't lose you. All right, I'll see you on the next video. Thank you.